All righty. Oh, do we have? No, I don't think we do. Let's get this up on there too. There we go. All righty. Doc here from North America. Good morning, good afternoon, and good evening. There's the dollar index as we usually start off. It's 103.44 is our bid for now. Uh, just inching its way up. Nothing major. It's not as if it's exploding or it's just it's just firm. Uh, we've been expecting all this. So far, it's been working about right. Hey, Robin, how you doing this morning? Stocks, ETFs, anything, everything, all things. Cool. Very good. Um, Looks like I like that one with the was it the spinners? That was very interesting. That um, email, very enjoyable. All right, so there we have it this morning. Dollar index now 46 actually 103.46 is their bid for. You can see it over on our beta. Let's see right there. You can see the same situation. We've been in a buy for a while there. Let's see if we can get that mouse to do its job. Are we seeing it? When I go like that, or is it? Oh, there we go. That one will do it. No, that won't do it. Let's see right there. You can see, and let's see if we can emphasize that. Let's push it like that. I guess you can see it there. Can we? Yes. Now we can see it. You see little thing moving around in there. You can see right here. Let's see if this one will do it. Let's try this mouse. Sometimes one mouse does it, another mouse does it. You see over in here, there we go. Now that's better. And you can see at this point, that's the weekly down there. You can see, it's pressing, just it's trying to slide into the daily sell. It's just on the edges of it. When we go over to, let's put it up on our main platform we're using right now. This is just the beta we're showing. We've been working on it for 6-7 months at this point, 5-6 months, something like that. Let's put it up over here. Right there and there, and we slide down, and there it is right there. There we go. Now we've got it, and you can see on the screen there. You see right there, still holding up. It's been in a buy since way back in here. You can see that. It's been pushing up on that buy signal for a while. Let's see, what is that? Are we looking at something different? Dollar index 102. Wait a minute, something's wrong here. Wait a minute, something doesn't look right. We're not seeing live. Let me put my headphone set on. No, that's a repeat. We've got a repeat going. Let's see. We're not live. I'm not seeing live. Let me go back to the chat line. We must have the chat line, right? Let's try that again. What am I seeing here? Let's go to there. Go to there. Ah, there we go. Now I see the live. Somehow or another I was... let's see. There we go. That makes sense to me now. Let's listen to the chat line there. All right. Excellent. 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 We're back up. You can see there the dollar index trading at, now there's a 103.47 bid, 48 bid. All right. I guess it's a little, now 46 bid. Very active. Very, very active. The world is getting comfortable with the idea that the rates will be cut somewhere out. Like I said, May, June, maybe July. I think it could be May. We'll see. We'll see how the numbers are. I don't. They have no interest. They really don't have any interest to actually lower rates and then see inflation lift up. They don't want that. and they're not going to allow that. I guess you could say that's the better part of it, is that they're just not going to allow it. So that's a very positive thing there. That they actually have that. I mean, you have to imagine they yes, resized your screens exactly. Well, no, it was it somehow or another was mine was playing another day. So, the last thing they need to do. I mean, you got to. Where was I? Oh, I know where I was going. They talked about transitory. And so that was really disturbing. In other words, the Federal Reserve for almost a year and a quarter didn't recognize the fact that inflation was taking off. Really, it's a very disturbing thing. You got to wonder, where is its head? What are they thinking? That type of thing. We talked about this months ago, years ago now. We were yelling inflation, inflation, inflation by halfway through the first 4 months of Mr. Biden in office. He had done policies that ignited the inflation, and the Secretary of Treasury and the Federal Reserve Chairman came up with a cute little phrase, transitory. Everything's transitory. Jeez, it's like relativity with physics. It's like yeah, we get it. And so they were singing the song transitory. Don't worry about it. And then it flew all the way up to 9%. And then they had to take rates up the fastest and highest ever in recorded Treasury, U.S. Treasury interest rates. No doubt we were up to 21% at one time, but we didn't go at such a speed. It went slow and like the way the Great Experiment. The European, the Turkish lira against the euro. They just didn't go from 1 to 33 in a couple of weeks, or 1 to 15 in a couple of weeks. Gradually did it over a 10-year period, just slowly, consistently, increasing and increasing and increasing and increasing and increasing and so forth. And so now, you had the chairman of the Federal Reserve and Mrs. Yellen, the head of the U.S. Treasury, our finance minister, basically saying, nah, don't worry about it. It's at 3%, no problem. And then 4%, no problem. It's transitory. Don't worry about it. 5%, no problem. 6%, it's transitory. No problem. 7%, it's no problem. They kept on doing that. And then they started saying, oops, I think we've got a problem here. And so they had to go from a half a percentage point to 5.5%, which was an explosion over just a few month period, like a 7-month period. Every month, or every Fed meeting, they were raising it a quarter or a half. And so, you start to doubt their ability to understand, perceive, comprehend, think. I don't know what magical words do you need to use. They just couldn't open their eyes. Let's put it that way. So, here we go. We fast forward to these last couple months, and obviously yesterday. And yes, now they see that everything is doing pretty well. It's not the best economy in the world, but statistically, it's doing some growth. Just like the same way China is doing. Where China is growing. But somehow or another, when they borrow $1 billion, they can't find $15 million to pay the interest payment. That's what's scary about it all. They want to tell us how the economy is doing okay and it's growing, and Bidenomics is fine, and we go, okay, yeah, how about that inflation transitory thing? Ooh, we'll have to talk about that another time. Yes, that's how they treat it. So a lot of us in the financial markets are like, what? What are they doing during the day? Are they playing pool, shooting, doing poker? Are they going to the racetrack? What are they doing? Are they paying attention to the economy? And so that's pretty much where we are at the moment. We're a little concerned that when they tell us we're growing and inflation's dropping, we go, you didn't know when it was going up last time, so are you going to sit there and tell us that inflation is dipping and dipping and dipping, and we don't have to worry about it? Is that what you're really trying to tell us? When we found out the last time you started that stuff, it went to 9%. And so, and you rarely, this is why Doc is on Dukascopy, because Dukascopy lets me say these things. Whereas you don't see that on Bloomberg or Reuters or Wall Street Journal or New York Times or the Telegraph or the Financial Times, or you don't see it on CNBC. You partially see it. You do see it on the business channel of Fox, not Fox News, but Fox Business. You'll see it on there. So we're not the most comfortable. We're not very comfortable with the Federal Reserve trying to tell us how well they're doing against inflation, and so we should lower interest rates. We're not really comfortable with that. And you know what? This time around, Mr. Powell doesn't want to get kicked in the teeth again. He got kicked in the teeth and almost lost all of his reputation with that joining in with Mrs. Yellen and Mr. Biden about, oh, it's just transitory. Don't worry about it. It's fine. And the next thing you know, we have 9% interest rates. And he has to go roaring from basically a half a percentage point all the way up to 5.5% in literally, an 8 or 9 month period. So, they don't want to be the next Turkey. Let's put it that way. And that's a ploy and play of the word Turkey, like what we eat at Thanksgiving, and like Turkey, the country who has watched their currency go from 1 to 33. And so, this is why I knew that they were going to definitely, as much as they would like to drop those rates, and I'm sure he's being told, whispered in his ears, oh, now you can drop those rates, don't worry. And we all do worry because you didn't know when inflation was going from 1.5% to 9%. You kept on telling us, don't worry. And so that's where we are right now. So everything is good. We here told you what we see, which is we're right about 8.5 out of 10 times. Whereas I can say Mrs. Yellen or Mr. Powell is, even with Mr. Powell controlling the levers, can't be right 8.5 out of 10 times. That's the funny part. And you can just go back and listen to Mr. Powell's YouTubes and then go listen to Doc's YouTubes over the same time period. And you're going to see, you're going to be voting for Doc to be the next Federal Reserve Chairman. All right. I don't want to carry around that thick briefcase. Okay, so from there, we will drift over to the euro. Let's see how the euro is doing this morning. Let's put it up on J4X. Let's see, right there. There's the euro. See, it's drifting down. You can see the fast is at 30.4, 30.3, and the slow is at 29. So it's telling us that it's trying to lift up in here. We're starting to get a little lift. Let's take a look at it over on Chicago Quant's main platform. Where is it at? Open? Oh, we didn't open it up. I thought I opened that up. There we go. And you know what? Let's just let's go to the dollar index again on the beta. Let's do that real quick. Let's see, where's that mouse at? It's around here somewhere. There it is, right there. And there it is on the beta. And you can see we've been in that daily buy, for 4 weeks there. I'm sorry, that's the weekly beta. That's the weekly beta. I'm sorry, the weekly algorithm on the beta. You can see for 4 weeks we've been in that buy, and you can see what it's done over those 4 weeks. It's climbed from the 101-ish area up to now close to the 10. Is it 104 now? No, I guess it's 103 and change. We're 103, and let me just double check it on the there. Let's leave that right there and just go right over to here. We'll show it to you live on our main platform, and then we'll jump over to the euro. Let's see, right there. Okay, yeah, so there it is right there. Trading at 103.44. Okay. And so you can see the same situation. The weekly fast has been in a buy since back in here in the 102-ish area, 101.75. And it's been climbing, and then the slow got into there around the 103 area. And let's see, where was it? It's like right around in here. You see that action. Oh, you can't see that now. Let's go to this. There we are, switching screens again. There it is, so right there. So we're just cruising along. The dollar's firm. I don't expect to see it explode up. And that's where we're leaving it at that. Now, I've shown you the weekly. Let's see, Robin says, resize your screens. Resize them? Oh, okay. For the beta, probably, yeah. Beta definitely needs resizing. There we go. Now let's go over to the euro and see what the euro is up to this morning. There is the great experiment. And there's the euro. Euro's showing still a little weakness, nothing major. You know, this is not going to be really, like it's not going to be like explosive. The currencies are going to stay steady and consistent. They know rates are going to come down. They're just not coming down now, and so it's just the theta basically. We'll speak a little Greek here, and the volatility, and we'll talk about the Greek letters. The theta, the time reference. That's all it really comes down to, and so it's premium and carrying forward. That's all it really comes down to at this point. All right. So there is the euro. Let's put it up on J4X at the same time. There it is. Yeah, it's on there. 108.17, just down a little bit. Nothing major. You see it over here on the main platform of Chicago Quant Technologies here. Just a mild slope. You're talking about from the 110. What's that high there? It was like about that high there was 111.31, and here we are now at, let me just double check that again. Right now we're at 108 and change, 108.17, and that high there, right there was that 110? I think it's 111.30, 34, 35. So it's not a big drop. You can see it's small slope. It can't even go after this low here. It's not going after this low over that long, 3-week period. I really try to emphasize that these markets are going to be slow. They're not going to really take off. Money is anticipating interest rate cuts. It is going to happen. I agree with them. But it's just not going to be in March. It'll be more like May or June or July. It depends on the data. One thing, as I said, I rambled a few minutes ago, and that is they don't want to get this wrong. They've already gotten something wrong before, and they definitely don't want to get this one wrong. All right. From there, we'll go over to the cable. And there's the cable right there. Cable, same way. I would call that leaky, like in a rowboat. It's very mild. You know how they like to say things are sticky? And the hedge fund people love to come up with very demure. That's a French word for, soft and nice, respectable. And they like to have these very soft explaining adjectives. They don't like to make it harsh, like it's cracking and falling into the sea. They don't want to tell you that, or the earth is opened up and it's been swallowed. They're not going to do that. They're going to come up with really soft. It's leaky, or if it's not moving fast enough, it's sticky. Things like that. It's so cute. The hedge fund industry is cute. It's very entertaining. They like to be very gentlemanly. They like to have savoir-faire. They don't want to, make it sound like a bunch of bullies pushing and shoving and swinging away. Hoodlums in the street. What is it? What was it? I was watching a movie. They called it barbarism in the street. Bullies in the street. Yeah, they don't want to do that. They want you to know, don't worry, we're managing your money. We do it with style. We do it with thought. We can caress those dollars, make them feel happy. Draw little smiley faces on them if you want. Yes, that's the way it goes in the hedge fund industry. So it's very cute, and then the media picks up on some of it, and it comes like they start referring to things as sticky, or leaky, or slow. I can't. I'm having too much fun. Using all those magical words. All right. Anyhow, there it is right there. That is the cable, and you can see again it's trapped in this big. We should put that in there. A big envelope. That's what we should do. Let's put that big envelope in there. It's like that. There's the big envelope. It doesn't seem to want to change more than just cruising along. You know, just wondering. It's wondering about. Wondering about. There you go. If I was still in the hedge fund industry, I'd probably be using those words like it's just wondering about. Excuse me. So, there's the cable, and you can see the cable up on. Let's put it on J4X. There it is right there. And as you can see right there, the fast stochastic is at 39. It's at 40.2, and the slow is at 42.67. So it's reflecting that weakness because this is lower than this one. You know, just shows you the action. This is above it in price, and so you can see here. You know, I guess you emphasize it. Look at that, just like watching a oscilloscope where the wave is just going sideways quietly. All right. Let's see now. From there, we'll do it on J4X to start off with. We'll go over to the yen. I haven't heard an LDP story in like 3 days now or 4 days, so thank goodness on that. Okay, U.S. yen. Dollar yen pair. Where are you hiding? There it is right there. You see the same kind of action, a little bit lighter. You know, it's leaking. You know, it's rolling over a little bit. Just a little bit. Just rolling over. And then over here, we'll put it up on the beta. No, I'm sorry. We're going to go to the main charts of CQT, and you can see it right there. It's been in that sell from that spot right there. It hasn't really done much. We're in a weekly buy, daily sell. It's in that neutral spot, I guess you could call it. It's playing it's a neutral at the moment. In other words, don't be long, don't be short, just be neutral. In other words, if you're long it, sell calls. If you or buy puts, you know, and sell other puts, you know, that type of thing. Do a binary, you know, something to hedge the possible slow slide. But more than likely, the best is to sell at the money calls and be long the currency if you're long it at this point. You know, in other words, sell the calls against it just to neutralize it. Since you're in a weekly buy, so it turns into a buy, right? And obviously you have more gamma or delta if you're into those things, if you understand what that means. And if you don't, I'm willing to explain it to you. So there's no problem there. And so the yen is kind of in that same situation as we look and see at, let's just show it to you again on right there. You know, that it's trying to go sideways. You know, and that's about all we can say because that's what it's doing and that's what the math is telling us. All right, and from there we go over to we do this. I see we missed. There's the Swiss. Swiss is starting to build that same situation. We've talked about this in the last couple of days. We're really starting to evolve into this sideways chop or envelope or consolidation. You know, it's got that thing going on there like that. Same as some of the others now. And so that just tells us that money knows, stand to the side, just let it be. Don't get too nuts about it. And it'll all straighten out. And then, the monies will start to move it around again. I mean, that's pretty much where we stand with that. And that has been the whole magic of it all, too. It has been doing that slow, steady, sideways action, and it's not really trying to change its direction whatsoever. So, all right. Oh, is it Biden to visit East Palestine this month? Now, this is the place in Ohio where the train crashed and chemicals poured all over the place, and Mr. Biden refused to show up and visit them. He got us scared, I guess. All right. Ugh. We're showing videos of it back in February of 2023. It's basically a year. As they say, better late than never. All right, and there is the Swiss again, and let's go take a look at it up on J4X. There it is. And you can see there, it's just, there it is. It had a nice big sell-off because the central, it was just roaring. Okay, and then it got down to 83, was that 32 or 33? And the Central Bank of Switzerland started to fight inflation from that. Now they seem to have, I think they're more like finding a central area. I can see this right there, 86, 87 area. This, I can see the congestion right in here, right there. And then when we see it here on the main platform, you can see this seems to be the area it's hanging out on. There's that, this high, this low. It's probably going to stay trapped. Matter of fact, we should probably expand that over like that. It's probably going to be trapped. Matter of fact, I would say basically it's probably going to be trapped in between that zone for a while. Just like that. Let's see. Widen that more like so. And there it is with the Swiss. Now from there, not much more to be said about that. I'm just happy that they're fighting inflation. That's a good thing. I mean, inflation is the great, I guess you could say it's the great tax. It's an evil tax. That's what inflation is. It takes your buying power away. You're still doing the same amount of work to get the money, but it reduces what the value of it is. You see right here, we are trying to lift a little bit after being in a sell that did almost nothing. You can see we're in the weekly buy right there. So I just expect it to carom back and forth softly like that until our math changes. All right, and then from there we're going to slip over to the great experiment. Right there. No, that's the wrong one. Right there. There we go. And even that seems to be going into that sideways chop, which is nice. Let's we would like to see the people of Turkey get a rest from the wild inflation. Let it catch up. Let it calm down. Do whatever, but let the inflation kind of go into that slow period would be very nice. At a half hour point, we always take a sip of our tea. There we go. All right, now let's put it up on the main platform right there. And you can see, how much that has been a real sideways action. The all-time close is 33.04. We're just goofing off in that 32.90s area. It doesn't seem to want to let go. We've been in a sell since right there. Hasn't done much. And we've been in a weekly buy now for half a year, I guess it is. Let's see. We've been in a weekly buy since the beginning of September, mid-September, right around in here. So we have September and October, November and December. Now we've cleaned off January. That's 5 months we've been in a weekly buy from the 28-ish area up to the 33-ish area. All right. From there, we break out to the bricks. We take a peek at the bricks, and we go to the number one brick, and that is the South African Rand. And there it is. Now the Rand has a couple of characteristics that are very fascinating. One is that obviously they're a big gold producer. So a lot of times when the currency is gaining against the dollar, and that's that all that red you see there on J4X, when it's gaining against the dollar, in other words, it goes down. And when it goes down like that, it's gaining against the dollar because there's less rand to the dollar, and that pushes the metals up. Usually we see gold go up from that. And so we'll jump over to right there. And right there. Now you can see the gold has been rising. Yesterday it seemed to peak out and go into a sell. And just a little bit down today. Nothing major. It's just pressing down. And as you can see on the screen there on J4X, the Rand has been drifting down, and that's why it was drifting up like that. And now we should see some type of bottoming action or something. We are in a weekly sell though. That's what's giving us the problem. It's been in a weekly sell since back in here, and it doesn't really want to get going. You know, we got into the daily buy here and it popped up, I don't know, $30, $40, something like that. And now it's trying to roll over again. There isn't a lot of, let's say, there isn't a lot of conviction at the moment for the product. You know, it's just, you know, as much as we would like to believe that there is, and it seems like there's a logical rationale that it should, we're just not getting it. You know, I mean, when you look at all the debt in the world, and you see the uncertainty with, you know, a lot of fighting going on in different parts of the world, and you would assume that people would run towards gold, but it doesn't seem to work that way. Now, last year, gold was up 10% for the year. That was pretty impressive. But you would have thought it would have been up a lot more than that. Gold kind of moves at its own pace. It's like oil. They have their own volatility that most people get a little confused when you see volatility in the stocks individually or the stock market, and then you see the volatility in the metals market. It doesn't usually seem to reflect the same. And let's put that on the beta now. We have that contract on there, and you can see right there. You can see it's trying to dip down there also, and you can see the weekly is trying to lift into the buy. But over here on the main platform of ours, it's still in the sell and doesn't seem to be wanting to join in. So that we've seen that the beta can pick up this stuff. That's one of the good things about beta. We just needed to update a little bit faster, but it's actually reflecting that there is some buying going on the weekly level. From there, we take a look at silver. And there's silver, and you can see that also slid into the sell yesterday from that action, and it's showing a little bit more pressure on it today, and we are in the weekly sell. And then let's take a look at it on the beta. You can see there on the beta, you can see right there it's trying to get into a weekly buy also. There's pressure on it. The daily is rolling over. You see that right there with, matter of fact, the daily has been trying to tell us for days now, you know, down, 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 down. On the main, it's not. It's only 2 days in the sell. But the beta has been telling us for days now that there was going to be pressure on the product. And you can see it. It tried to climb up, and now it's down well below where it started from on the beta. Then, let's go over to copper. Obviously, we relate to copper as a major asset in China, and we know that, you know, they're having a lot of issues. So it looks like as they were going pretty much the real estate market, which is 30% of GDP in China. You know, you can see that copper has been being bought. You know, they're running towards it like a place to park assets. And we went into that buy there, and still in the weekly sell though. Now the fast did climb into it last week, but we need the slow to do that because you're not getting a chance to see these charts every hour of the day, whereas we are able to see them every minute of the day. You're seeing them only once a day here on the webinar. So we always tell people pay attention to the slow more than the fast. So fast is just like a warning light, but the slow is the actual starting line. And you can see here copper starting to break down today. We're seeing that weakness there. And let's take a look at it on Mr. and Mrs. Beta. HG right there. There it is. So you can see here it went into the buy back there and still there, but it's dropping today and it's not reflecting yet. And the weekly buy, it went into the weekly buy last week for that spike that we had, which is nice, back in here. And now it's starting to break down, and we'll see. We're trying to tighten this up so it will be more up to date. And so there we are. You can see copper trying to, just get a grip on itself in a country that, in the world. And we always, like I said, we look at copper because of the ghost city situations that they've done, and the effect that real estate has on China, and how much building they do. And at one point, they said that they were going to make the crane the state bird, and then they put a picture of cranes that do construction. They were doing so much construction, and then we found them knocking those cities down, actually building skyscrapers, and then knocking them down and building them again, just to create jobs. Unproductive. That's why you can't find $15 million to pay a dividend for bonds that you have $11 billion of or $33 billion of. You can't find $50 million because you've spent all the possibilities of the assets themselves, so they don't have those monies anymore. They're gone. Or they probably bought planes and ships and things like that with it and pretended that the real estate market would survive. Obviously not. And that's why we look at copper the way we do and have that attitude about it. All right, last but not least, we'll go over to the platinum right there. You see platinum is starting to make that dip. Also, let's give that a reset because that seems to be wrong. Like that. And right there. So it went into the sell yesterday. And let's see where it is today now. There we are. And you see that pressure on it again today. And you can see we've been in the weekly sell since the 945, 950 area. And I mean, it's only at 915. It's not like they're beating the thing up. Again, it's a very, relatively speaking, it's a very quiet market. They're trying to get this whole thing figured out, I guess you could say. When you're in a situation like we have been in, where there's not a great clarity of what the Fed is doing, or and what the worst part is, a lot of people just don't trust the Fed anymore. They don't understand. How can we be this? I saw, was it the money manager, Grenlock, yesterday or 2 days ago? He was suggesting something that was very interesting. He follows all the states individually on their unemployment or their employment, their labor numbers. And so he said out of the 50 states, and then he said they also do the District of Columbia, where Washington, D.C. is. They do, so basically like 51 different states in a sense. And they look at the unemployment number, and he said that it is down. It's off by 85%. In other words, he's saying that 85% of the reporting states, 85% of them, including the District of Columbia, their unemployment number is higher not the same as the national one. He doesn't understand why every month the unemployment number doesn't go up, because the states are reporting higher unemployment. And so he says, he's been watching this for a couple of years now, and he doesn't understand why it won't move. But when you look at the individual state, over 85% of them are moving up high. I mean, much higher than what you see on a national level. And he said it doesn't make any sense to him. So he's starting to doubt the numbers on the national level. And again, we only have Mrs. Yellen and Mr. Powell to credit that. I mean, they couldn't see inflation for about was it like 16 months? They could not see inflation coming, as it came and came and came. And you could go back and look at my webinars back then, and they're saying it's transitory, and I'm saying this is insane. It's exploding, and they're saying no, it's not. Don't worry about it. And so, it really makes the evidence that what they do in Washington doesn't match to the physical or the reality. And so when you start to break down these numbers and you start to look at unemployment in California, and you see unemployment in New York, and you see unemployment in Illinois or Florida, and their numbers are rising, and he's saying the 15% that are not reporting, their numbers are not increasing, or they're not decreasing any. They're just not they're unchanging, or they're very small moves. So it's not like New York, California is reporting this massive number on the downside. Well, Florida is reporting a massive number on the upside, or something like that. That's not happening. He said that's what's confusing. He says, I don't get it. I don't understand what's wrong with the national numbers. And so here we are looking at the action. In this case here, we're looking at platinum, and you're seeing it back off, and you're wondering, why is it trading under 50% of the value of gold? Like, how does that happen? Why is it doing that? None of it. And then again, we only have Mrs. Powell, or I'm sorry, Mrs. Yellen or Mr. Powell to blame, or Mr. Biden to blame. Any of the three of them, because they keep on telling us a whole different story. What are they doing to the numbers? What is it really reflecting? And so that's the big question mark all the time now. All right, and from there we go over to the energy sector. Let's see what the energies are doing today. We'll put Brent up on J4X. And there is Brent right there, trading at 81 and change. 81.30s are offered. You see a couple red bars there. You see the fast stochastic trading at 40.3. We see the yellow dashed one, the slow stochastic trading at 57.4. The pressure is on. We'll put Brent up on our beta right there. There we are. And you can see here, this is Brent, and it's climbed nicely. It's still in the buy there, and starting. I guess you could say we're starting to see some pressure, but again, we're 2 weeks in a weekly buy in it, and it's not letting go. That's for sure. Is that Brent? BZ. No, that's not Brent. Where's Brent at? That says BCF. No. Let's see if we can find. That's odd. Doesn't seem right, does it? Let's try it one more time. Let's put natural gas up there. There's natural gas. Let's go to Brent again. That's not right. What's 3.5? I don't understand. There's natural gas. There's Apple Computer. ZBF, that should be the bond. Yep, that's the 30-year bond, U.S. Treasury bond. And let's see what's going on with. Now, Brent must be. Let's It's not updating. It must be. They must be switching to the March contract. That's what must be going on there. And let's just put crude right there. There's West Texas Intermediate crude. You can see 3 days down there with dots. You can see 2 days down in the algorithm, and you can see the weekly still holding on there. Let's put it up over here. Right there, same situation. 76.60. Yeah, that sounds about right. J4X will get going in a second. There it is. And you can see there the fast stochastic trading at 39.1, almost 39.2, and you're looking at 55.2 on this slow. So the pressure is on the crude there, and we see the same thing with. Let's go back to the Brent. Seeing the same thing with the Brent. There it is at 40.1 and 57 on the slow. All right. Let's take a look at natural gas up on there. And there it is right there, natural gas. You see the March contract popped up a little bit yesterday and is trying to get into the buy today, as you see right there. Put that little line in there just to give you a warning that it's above this area right there through the zero line, so it's trying to get up. We even have a green dot. If it closes there by the end of the day, that means that it goes into a daily buy. At the same time, we are in a weekly buy, so maybe there's going to be some upside action again in the natural gas arena, which would be nice. Over here in the States, we have it trading at $2.11. And so the only other way we can recognize what the Europeans are paying is we go to there's a Spanish energy company that trades stock on it, and it matches up all the time. Now you'll see in a few seconds here. We're going to put it up on J4X. Right there it is, trading at 24.75. So it's moving down, and you can see the fast is at 20.1, and the slow is at 25 point. Is that 25 point, almost 20, 23.9. So, it's showing us that the pressure is down, and that's good. And then we take a look at it on our beta platform, right there. Same situation. It's down below at the 24s, and you can see it's been in a daily sell for a while now here. And at the same time, you can see it's been in a weekly sell, pressing down on the weekly sell at the same time. So that pressure has been consistent, and that's a good way of understanding the price of natural gas in Europe. Basically, it's one of the only ways we can get a flavor of it. All right. So from there, we take a look at, that's the energies. Okay, so that's the completion of the energies. So what we do is, lately we've been going around, taking a look around the world, seeing what the stock indices. Unless one of you traders out there or watchers want to ask a question, you're always welcome to ask a question at any time. Robin always posts that at the very beginning, and basically, sometimes we get into some deep conversations, and sometimes we don't. Up to the individual, really, what it comes down to. I always say, the only, there are no dumb or foolish questions when talking about money and trading. There are only long answers or short answers. All right, I'm going to save that. And we're going to move over to the stock markets, and we'll take a look at the global stock markets themselves. I think I found another European one to follow. And I think I might try to get the Singapore Straits Times also. That might be a good one. All right, so let's see, what do we got on the screen? We got the beta on there. So let's do this. We'll go through the beta. And we'll go to the Asian markets to start off with. Let's see how the Nikkei is doing today. Or how it did today. You see we're trying to get into a buy there. See, it's come down a little bit, nothing major, hanging around the 36,000 area. We are like at 40-year highs in this product, and the all-time highs only is in the 39, so that's pretty good. You can see here the weekly's been in a weekly buy for a good 6 weeks. It's not changing anything. The next one, we go to Hong Kong. See what Hong Kong is up to right there. You see the Hong Kong has come off its lows, fell from the 115 area as the real estate market collapsed, hit a 95. The 95, the index is at 10 something and change. You can see that right there. This was 115. You see that right up in here. So we've bounced back up over to 100, and now we've dropped a little bit with it. You can see we were in a sell for about 4 days here, and it's still down, trying to lift a little bit more, but it's in that, and the weekly is still in that weekly sell. Then we go to the epicenter of question marks, I guess you could say. You can see that the China index has been in a weekly sell for 10 weeks. You see it's been sliding for all those weeks. In a daily sell for the last 3 days, we've gone down to something like 10-year lows or something like that. The all-time low of this index is 5,000 and change. The all-time high is around 18,000. And here we are now trading at 8,000 and change in the product. So we were thinking it might drift down into the mid to high 7,000 area and then start the bottom. This will be interesting to see because money managers here in the United States are really excited about the China market. They think it's the epicenter of success for Earth. So they watch it and they talk about it, and they thought geez, if they'd only start to grow again, that would be great. But America has to be growing to make China grow. China can't grow us out of it. They were hoping that it would be a major economy, but it's not. It's about the 4th or 5th largest economy in the world. The European Union is the 2nd largest economy in the world. The United States is number 1. From there, we go over to, let's see, what is it? That's the Asia. Oh, let's take a look at the Kospi in South Korea, and you can see there it's rallying up. A lot of people were thinking that all this big weakness we saw here on the Kospi, which was a big move down, basically. Where'd we go there? There we go. Was because of the China market. So it collapsed with the China market from the 2660 area down to the 2440 area. And now it's starting to do a bottoming thing. You can see we started to get into some daily buys there. And we'll see how the weekly starts to turn around out of that. Then we'll do a quick run and gun. There is the DAX in Europe. And you can see the DAX is moving down the last couple of days. But today it is lifting back up again, looking half decent. Trying to go into a sell at the same time. And we were trying to climb into the weekly buy. So it's a little confused at the high end of the range, I guess you could say. Then we go over to the CAC 40. And the CAC 40 is doing basically the same. It was in a buy for 3 days there. And now it's trying to flirt with a sell at this point. And you can see the weekly went into the buy last week and is still in the buy right now on the weekly basis. We'll see how it closes out and shows up on Monday afternoon or Monday. And then we go over to the FTSE. And the FTSE been relatively firm, been in a daily buy for this whole move up. They did sell it down yesterday, excuse me, but not that deep of sell-off. And you can see here, it's been in a weekly sell for 4 weeks, even with, all the way back into right here. It went into the weekly sell and then sold down, and now it's turned back up. And the weekly is not exactly joining in yet. And then we'll go over to the S&P 500 right there, reflecting the action we had yesterday. You can see that They really knocked it down. It's trying to firm up a little bit here today. We were in a daily buy all those days, and now we are in a sell. And you can see the weekly doesn't care. It's still in that buy. So they're not exactly throwing this stuff out the door. Let's put it that way. All right. This is Doc from North America. We're done. We will catch you all tomorrow, same time, same channel, which will be, actually tomorrow's TGIF. Thank goodness it's going to be Friday. It's the end of the week. We always like that end of the week thing. And so, happy trails to you until we meet again. Happy trails to you, to all our trading friends. Later, traders. Have a safe and smart trading day. Ta-ta for now.